Hey guys, it's BlockchainBrad, and today I'm speaking with none other than George Tsao. He is the CEO and founder of BITMAX, which essentially is a transaction mining exchange that's come to the fore and is something that we'd like to understand, explore, and come to know properly on the blockchain. So thank you, George, for your time.
Thank you, Brad. Thank you, everyone. Hi.
It's great that you are here, and thank you once again for being here. This is an entirely unpaid interview. It is not sponsored. There's no donations involved. And George, can we just confirm that with you?
Yes, it's non-paid.
Okay,
Thanks.
thank you. And that's also for all the community members who do demand transparency and demand up and front exactly what we stand for, and that essentially is information education. Now, let's get down to it. It says here that you are about transactional mining as an exchange. George, can you tell us exactly what you mean by that term, transactional mining?
Well, transaction mining, basically, it's a profit-sharing mechanism that we share most of profit with our users and with our communities. So we do provide two levels of benefit for anyone who trade our platform and also hold our token. The level one is, for example, if you trade on our exchange and you pay $10 of transaction fee, the $10 worth of transaction fee will be paid back to you based on the price of our token, meaning that by the end of the first hour, you'll get a $10 worth of our token BTMX in your account.
Right.
And the second level of benefit is by holding our token, we will distribute 80% of our entire revenue from the commissions to token holders based on the percentage of token you hold. So for example, if you hold 10 tokens and there are total 100 tokens outstanding, so you'll get 10% of our total revenue of 80% of our total revenue. So
Okay.
basically it's it's two level of profit sharing mechanism.
Right. Now, I want to go deeper into those two parts so we really
Sure.
understand. Now, with the first level, you mentioned that essentially there's going to be a system in which people can do a one-for-one trade. Now, it's going from some sort of point of value like a currency into tokens. Can you tell us, as an example, for example, say you're making a trade, how can you possibly give the same amount and still have that same, have a sustainable model in place?
Yeah, sure. I mean, let me explain the model in detail. So for example, if you're trading BTC/ETH pairs, if you trade, say 10 times and you pay maybe 0.1 ETH, so based on our token average trading price in the past hour, so you will get the same amount of token in your account. So that's the level one. So I guess the level two is like I explained, you'll get a profit sharing by the 80% of our revenue. You got based on the number of tokens you hold, you'll get that, right? So I guess your question is how the exchange is sustained by share most of the profit, right?
Right.
Is that your question? Yes. Actually, it's a very good question. So basically, think about the cost of exchange have. We have two levels of incentive. One is the revenue share. We share 80%, so we still keep 20%, which meaning that we still got income, so we can pay our bills. We can pay our salaries, stuff like that, right? And the tokens. And the first level, we pay our tokens. The tokens, I don't think it is as equivalent as a stock or anything, but you can think of that. The token, what is it? What is our platform token? It's actually a kind of a confidence in which the platform, how much revenue the platform can earn in the future business. So meaning that the value of the token is really dependent on your projection on, say, 1 year from now or 2 years from now, how much revenue you can get our platform can generate. So that's the total value of the token. So the token is already there, so you can get a percentage of that. So that's actually that's the economic model.
Right. Now, let's talk about that in the context of the dividend model. What I'd like to do is try and discern or explain the differences between a dividend model and your model, and exactly why you need to explain the difference.
Sure. So I would do dividend because we're not a security token. So what we do is by holding our token, you actually share lots of information with us, how the token is generated, how do you trade it, trading volume, trading price. By sharing the kind of information with us, we provide you information usage fee in the format. You can think it's similar to dividend, but it's not the same. So basically, I mean, what is the question again? Compared with the dividend model?
Right. So obviously you have your own model, and I've actually heard you speak of this previously, and it's regarding information as an information fee system. So talk us through the difference between your model and the dividend model itself, as it's known.
Well, the dividend model meaning that by holding the token itself, you get a certain benefit, the dividend, right? So by our model is slightly different because you still need to do something. You need to upload your token trading information, your token holding information, stuff like that. It's, you get compensated by the usage of your information and for upload of the information. So there's a slightly different kind
I
of
see.
piece. But
Right.
but overall, the economic model is the same. As long as you do your job, you get paid.
Okay, now let's talk about transactional mining in more detail with
Sure.
regard to your global reach and your global network. Now you have a
Yeah.
3-exchange group or design. Talk us through those regions, specifically what you're doing in those regions, and then we'll talk about possibilities of growth beyond that.
Sure. So we do have 3 exchanges globally. The first one is BITMAX. It's actually an Asian-based exchange, and it's a token exchange, right? The other 2 exchanges we call it GDM. So one is Canadian-based, Canada-based, and the other one is US-based. So they have different scope of business and they serve different clients. For example, for BITMAX, we now serve any people from non-US side, and also there's a list of sanctioned countries we don't do business with. For example, for Iranian or for North Korea, we have a list of countries that we do not do business with. Just it's not because we do not want to serve them. It's because the regulatory requirement and it's for legal requirement we cannot serve these countries.
Okay.
And among them, the most important country I would say is United States because its population and its trading volume. It's very important. So basically, we do not want to miss the entire segment. That's why we have another 2 exchanges in North America. So both Canadian and US exchange will go the fully regulated path, meaning that they will apply for a broker-dealer license, they will get BIT license, they will get money transmit license, we got custodian service from authorized dealer. So everything is legalized, and we're gonna target on institutional investors, institutional traders, and also credit investors based in North America, based on North America. It will have fiat. Yes, it will have fiat. So, it's totally different from BITMAX, where we do mostly token to token. So all 3 exchanges combined, we serve a full, a full list of people from all over the world. Not a single exchange can do that right now. Think about Coinbase. Coinbase has a huge presence in the United States, but it has zero presence in Asia. So it does not serve any people outside US. And think of Huobi and Binance, right? They claim to be international, but really their presence in North America is almost zero. Binance may be a different, but there's no way they can serve US institutional investors because they're not very legalized. They're not a very regulatory kind of a friendly exchange. So we are in the unique position of I would say connect both North America and Asian, and also Europe, and also connect traditional Wall Street and Main Street. So
right.
we're in the position that go ahead.
So
we want to be the.
Sorry, go ahead.
Yeah, we want to be the first one to serve a full global global all type of investors. We want to be the first one to serve that.
I see. Now, just to recap, what you're explaining essentially is that there's a propensity for different exchanges to either think of the West or the East, and in a sense, focus on that solely and wholly. What you're doing is bridging them together through your 3 or tripartite approach to exchanges.
That's right.
Now, I want to explore this a little bit deeper with regard to BITMAX itself, so people understand. Now, right now, the crypto-to-crypto exchange is the design of BITMAX, but I want to understand that in the context of the overall the framework that you're designing. What is the name of this umbrella approach, and will BITMAX still be subsumed in this 3-exchange approach, or are we talking solely of the Chinese part of BITMAX when you talk about these 3 different exchanges?
Sure, I think 3 exchanges, if you take them apart, every one of them will be a very successful exchange because as we see the exchange world, there are probably a couple thousand, more than a couple thousand, 10K plus exchange over there. Every different exchange serves a different segment. Some exchange only trade derivative, products. Some exchange like token to token exchange. Some exchange like Coinbase mainly trade major currencies. So BITMAX itself has a huge potential to be successful as an independent exchange, and that's this is our focus operation right now because this is the first exchange we launched. The reason that we do not launch Canadian and US exchange is just because we want to focus one thing at one time. So we do not want to build 3 independent exchanges. We want to build it as an integrated group, so each exchange can benefit from each other. So talking about this, yes.
Now,
about it.
Sorry, go ahead. I was just going to ask you, can you talk us through the value of the other two exchanges once they eventually emerge in Canada and in the US with regard to BITMAX? Because that's the crux of the conversation. How are those two going to build? How are you going to build in the value of those two exchanges into BITMAX, given that it's a crypto to crypto, and given that it's in China, essentially, or in Asia, the Asian space, where essentially there's a lot more jurisdictional challenges?
Yes, actually, there's one thing I want to tell you is most of our users is outside China. So there are a big percentage of users in China, but outside China users are actually greater than that. We have a large user base in Russia, in India, in Taiwan and Korea. So also in North America, like Canadian country, we do not serve US clients. So BITMAX itself is a global international exchange. That's one thing. The second thing is, as we notice, as any token to token exchange, the biggest problem is how do we attract new users? For example, if you are new to cryptocurrency, I want to buy Bitcoin, where can you buy it? So that's the biggest barrier preventing people from trading crypto, a digital asset. So the benefit of having two other exchanges, we enable US and Canadian investors, new investors, to convert fiat, US dollar and Canadian dollar, even euro, into Bitcoin and Ethereum. So that's the step one of their investing in the digital world. And then once they convert their asset into digital asset, they can go to BITMAX and start trading over there. So I think it is a very, very important piece that we can enable fiat trading for other two exchange. Will bring lots of new volumes instead of just, in addition to people already having a Bitcoin or Ethereum, because the percentage of population of people already holding digital asset is still very, very small compared with the entire, the world, like 6 billion people, right? It's still very small. So that's the thing.
Now, I want to talk to you about moving back to fiat again. Now,
Sure.
there's no likelihood, I imagine, in the near future of fiat being in the conversation for BITMAX itself. But as you mentioned, fiat is going to be the focus, the inclusion of fiat into those other two exchanges. So I want to ask you, how can you ensure the value transfer from these fiat mechanisms into BITMAX when they could essentially, users could choose any other exchange to do crypto to crypto trade?
Well, it's very simple because we are a group, all three exchanges are a group. So we can simply post a link on the other two exchanges. If you want to trade these two exchanges, simply click the link and your funds will be transferred to BITMAX. It's very easy to start trading there. It's kind of a one-click solution. Otherwise, you have to open another account in other exchange and copy and paste your address there and move your asset around. It's a lot of trouble. So in the internet world, it's all about to simplify user experience. So when you find an easy solution, people will addict to it. And that being said, I'm not saying 100% of the new users will have to trade with our BITMAX exchange. But I mean, there will be a very decent percentage of users who will stick to our exchange. That's the value we're trying to build.
Right. So essentially, you're talking about streamlining to make the user transition seamlessly. But I also wanted to talk to you in the context of the roadmap. What is the likelihood, George, with regard to fiat inclusions, and when is that expected to happen, given all of the jurisdictional challenges right now that the US are facing with the SEC, for example?
Yes, this is a very good question. So we expect to have our Canadian exchange launched 2 months from now. And we're thinking half year from now, we should have our US exchange operating. It's just my estimation, but based on the current steps we're taking right now, the best estimation I can give you guys is half year from now, we will have a US exchange up and running. So technology-wise, it's just where it goes with the application process.
I see. Now, how important do you think that is, George, to having that exchange built in, or those two in Canada and in the US, for a value add for BITMAX? Is that an imperative for this to have really a real stronghold in the marketplace?
I think this is very, very important. The reason being that is right now we have 20 million of people trading digital assets. But this number can potentially go up to 200 million. So how do we achieve that? One of the reasons is US regulators, they have not cleared the path to how people buy and hold digital assets in the past. So that's why a lot of people, a lot of institutions like all Wall Street investment banks, they have already the trading desk, but they cannot legally buy the digital asset just because the regulatory issue is still pending there. So as soon as the regulatory barrier is cleared up, I would say hundreds of billions of new US dollar funds will come into this world, And this is greater than our entire digital volume right now. This will be greater than entire market cap right now. So this is actually the chance for us new exchange to merge, and we have reshuffle. So this is a chance for our to emerge and compete with the biggest exchange right now. Because thinking about the new volume, the existing volume will be not that important. So whoever will be the first to take up the new volume will have a very important position in the new kind of crypto economy. That's my view.
So you're talking about first mover advantages, and we are going to talk in detail about some of those other exchanges that have emerged as first, first entry in the space, and those that have moved on beyond. But I want to talk about now the 80% commission fee, and talk me through that. How does that work, and what's likely to change as you evolve?
Okay, sure. So for example, I mean, the way that exchange collect trading commission fees is by trading pairs. For example, if you use BTC to buy ETH, so we'll charge commission fees based on BTC. And if you use ETH to buy any other coins, the commission will be charged, using ETH. So that being said, the commission will come from a collection of digital assets traded on our platform, and 80% of that we collect on a daily basis will distribute to your account. Meaning that if you hold a token, if you have account with us, if you have tokens in your account, very likely every morning you wake up, you check in account, you will see a list of tokens will be automatically placed into your account. It's your choice to hold it or sell it. So that's how it works. Yes.
So essentially, just by having tokens in the exchange, you are rewarded with more.
Yes, if you're willing to share the token information with us, you will be rewarded more. That's also a way to incentivize people to hold our token.
All right, now let's get this clear. It needs to be on the exchange, not off the exchange somewhere else.
It has to be in the exchange, because I have no way to scan your wallet address, and I have no way to know whether your wallet can accept different type of tokens.
Right, and that makes perfect sense. Now, let's explore a little bit more about the sustainability. I really want to help the audience understand your model, your revenue model specifically. So talk us through your 20% commission, how that's important. Talk us through also the data elements, how you plan to sell data, and any other things you're doing to provide revenue for your company.
Yeah, sure. Yeah, let's go back to the traditional equity exchange model. So I would say 75% of equity exchange revenue come from closed auction. So their commission fee is actually break even, and they do charge fees from listing fees. They do charge fees from data fee. There's a data usage fee, market data fee. They do charge colocation fee. So that's my view on how crypto exchange should evolve. I mean, crypto exchange right now charge way too much commission fees. Normally it's 10 pips. Of course, transaction mining exchange give everything back. But still, there are traditional crypto exchange like Binance charge a non-trivial commission fee. I think it's not very healthy in the long run for investors. So the major direction is exchanges should not charge that much of a commission fee, and commission fee should not be a very important percentage of exchange revenue. So what I think is even listing fees. I mean, right now exchange are charged for the listing fees actually squeeze the project. For example, a project collects $20 million from private sale. If you want to list a 4 top exchange, it'll probably cost you $5 million, which is not very healthy because the project should be able to spend money on research, on hiring.
I'm sorry to interrupt here, but I just want to clarify. I want to talk about it. One of your comments, you mentioned, essentially 1/4 of the overall raise that's being generated by an ICO, as you mentioned, with the statistic of 20 mil. Now, we're talking about 1/4 of that being the price, essentially, for something like Binance. That is clearly not sustainable for any projects. How are you, in terms of price comparisons of Binance, for example, how are you going to be really competitive in that space, given that they are essentially so expensive when you talk about it at that level?
They're expensive in 2 ways. They're expensive for listing fees and they're expensive in commission fees. So right now we charge nothing for exchange fees because we care our project. We want to help them success. And we hold a very high standard bar for listing any project. It has to be a quality project to be listing we don't list any all tokens if they're just pump and dump kind of thing. So I've seen way too many of these projects. We want to make sure we have very, very high standard of listing projects. That's one thing. 2 is we charge very low commission fees. I mean, right now we give everything back plus 80% of everything. So that's the way we're going. And going forward, back to your question for revenue model, I think the exchange itself has to diversify their income. For us, we're planning to have sell our market data. There are two types of market data we're willing to sell, we plan to sell. One is consolidated market feed. I don't think there's anything product existing in the world. We have too many exchange, what is the best bid and ask, what is the volume across the global. Those systematic traders, I would say, or quantitative traders, they want to know the market feed. They want to get a sense of current trading volume and price. So this is a project we are doing right now, and hopefully we can deliver to our users. That's one thing. Two is our exchange dedicated data feed. We want to make it a product so that most people can use it. There will be two levels of data feed. One level is if you only care about the basic information of the about our order book, the depths, you get it for free. But for professional traders, if you want tick by tick data like NASDAQ and IZ offers, you need to pay a fee for that. So that's one source of our revenue. Another thing is we do plan to build a data center. So by that time, we will be able to host the colocation servers in our data center. So we will charge a fee for place servers in our colocation center. So that's a third form of revenues we will get. So we want to make sure we do not charge too much for the commission fee, but rather we provide lots of service and we charge for the service we provide. So that's the revenue model in my view.
I see. Yeah. So what you're doing is you're telling us about plans whereby you can circumvent those the cost for the user of the exchange. Mm-hmm. And you're also talking about how you can really minimize the costs to list that for the projects themselves. But this is the thing I really need to get clear is how can we be sure that these ideas, which essentially from what I'm hearing are currently theoretical and not yet active, how can we know that they will properly enable you to circumvent the other models we've seen and actually work so that you can sustain this model? How do we know that we can be sure that you will generate these revenue?
Yes. So basically, if you think, what is the key point for an exchange to sustain? How do you attract users? It's not, trading money, of course, that's tactics, but strategy-wise, how do you choose one exchange to trade? Why NYSE is there for such a long time, and how come all of a sudden NASDAQ emerged? And how come ARCA, Director Edge, the three exchanges emerge while there are already two giant, NYSE and NASDAQ over there? The only reason they can emerge is one, they have better technology platform. Two is they're very transparent. Three is they provide a very robust practice, very robust service. So I think it's the same across the global, across different industry. For crypto exchange, transparent, robust, and safety is always the key to attract clients and users in the long run. I'm not saying I can attract users even if I have the best technology, best service, the most transparent exchange. I'm not saying I can compete with Binance in day one, but as time goes, people will realize how important it is to be transparent and robust and efficient at the same time. So they will stay here, they'll come here and stay with our exchange in the long run. That's one thing. And two is we have our strategy plans written from day one, half year from now, it's never changed. We execute according to our business plan. So market data feed is something we already been working right now. So first pilot program, you will see it in our, if you apply for our API, you can subscribe to our market data feed right now. But for NDBO, the consolidated market data from different exchange, that project will take a bit longer because we need to cooperate with other exchanges. So I would say it won't be available maybe until several months later. The data center, it's already been talks in setting up a data center. So it's not some project like in the moon or far, far away. No, it's been in the process. So we are evaluating the benefit of, right now we're hosting with AWS. Of course, the benefit of that is, one is it's very fast to set up. Two is cost effective, meaning that if you see volume jobs, you can remove your servers within maybe next hour. So it's very good. But in addition, if you know what your volumes looks like, if your business stabilized, it's always better to have your own data center because you have your own control of the hardware. And it's also cheaper to maintain a big data center. And also for different regions, you can set up data centers globally to solve the latency problem. So that's a project in mind. I mean, I think exchange have to have its data center down the road. AWS is just a temporary solution.
Absolutely. Now, clearly, what you're
Yeah.
saying is that you have an action plan that you are enacting right now. It's not just theoretical, as I mentioned before. So,
Of
thank you for
course.
explaining that, because I think the public do need
Hmm.
to know. Now, let's talk about mining exchanges generally. There's
Hmm.
been iterations since the beginning. You mentioned Binance; it's a perfect example of that. And then from there, we've seen the very controversial F coin emerge, and then from there, we've even seen things to the like of BigGo and CET. Now, talk us through, without too much of a sales pitch, talk us through your core difference and exactly why, you have value in comparison to these other iterations we've seen.
Yes, that's a very good point. That's a very good question, actually. We have seen many transaction mining exchanges, but most of them failed. I must say that. The reason is mining transaction exchanges have a very high entry bar in two different aspects. One is the technology. So a transaction mining exchange by nature will attract lots of volumes just because it's economic model. People will get here and trade it because there are certain benefit of trading this exchange. Think about that. If you trade on Binance, you pay a commission fee, but if you trade with us, you probably get a rebate. So
Right.
people naturally will try to trade with the money transaction exchange. But why the money exchange failed for technology reason is because the number of transactions per second they got is way too high than their system can handle. We've seen so many different cases, even including BigGo, that their system cannot hold a many huge volume. So that's something it's in our area of expertise because most of the team come from Wall Street background. So we come from exchange, we come from investment banks, we come from high frequency trading shops. It's our area of expertise to handle a large volume of transaction at the same time. So we're expert building trading systems. So building a match engine is not a rocket science, and a lot of people can do that. But if you're talking about over 100K TPS in a second, it takes an entirely different design. So it's not something you can easily do it. So that's
Right.
one of the advantages we have. The
So
second
just
one,
to clarify though,
go
even
ahead.
what that first
Sure.
point, so the audience we can recap this,
Mhm.
is technology. That's something that often when we talk about these transactional mining exchanges, the tech itself is lost in translation with all the other benefits. But what you're saying is first and foremost, that tech really has to talk and has to really properly service the requirements of this to function.
Yes. So you have designed properly, make sure it can handle a large amount of volume at the same time. So
Right.
our exchange, our technology is based on the traditional equity exchange. It has no problem to handle this type of volume. I mean,
Right.
F-point
And
system
George,
is
sorry to
pretty,
interrupt, but
yeah.
how can we know that? Is there any way that we can verify the quality of your technology? Is there any transparency with regard to that for people to explore it, experience it, and
Yes,
analyze?
definitely, definitely. So we are doing pressure tests almost every day, and we do invite a small number of people to trade on our platform, just by sending numerous orders to test what is the limit of our capacity. So
Mhm.
before the mining start, we will invite more people and more institutions to join us, join our test process. You will see how fast we can process your order. Yeah,
Sure.
I'm sorry.
Th-
Yeah, I'm sorry. I
That's
cannot open to every single one of them because every tester we have to allocate that resource to them. But I definitely invite a small group of people to participate in our pressure test.
well. Thank you
Yes.
for explaining it. Now let's talk about some of the other core differences and
Hmm.
and the benefits that set you apart from, as you were mentioning before, CET, Fcoin. Let's keep going. There must be others.
Sure. So the problem with Fcoin, I respect Fcoin because Fcoin is the one who first brought the fee sharing model into digital asset trading exchange. The problem of Fcoin is they pay way too high dividend at the very beginning. And as as the dividend curve drops down at a certain threshold, the people find there's no incentives to hold their tokens and they start to leave their platform. And the number of period is so short, Fcoin doesn't have enough time to convert itself into a traditional exchange like Binance. So
Mm.
meaning that the percentage of organic volume stays in Fcoin is relatively small that doesn't sustain. So that's the biggest problem Fcoin has. CET did a very good job actually. I think CET is a very successful model compared with Fcoin in terms of their conversion into a traditional exchange. Their lock and mining kind of mechanism is a novelty. They are the first one to raise that mechanism. I think that's something we can borrow.
I see.
Yeah.
What about dumping? How are you going to prevent that sort of behavior?
Yes, dumping is a very serious question. So a very serious problem, especially when the token price goes down and you will see the mining unlocks more tokens and people keep selling tokens and drives the token price keep down. So
Right.
I would say there are different ways, different mechanisms to solve this problem. The core of that, you need to control the circulation. That's one thing. And two is you need to want to keep in mind the ratio between tokens outstanding and the volume increase has to be within a very healthy range. As soon as the token outstanding increase, I mean the ratio increase more than a certain range, people will start to selling your tokens. The reason being that is because you do not have enough incentives for people to hold your token. So that is a serious question for us to keep in mind. And our solution for that is we have different mechanisms to incentive people to lock their token. That's one thing. Either passively or aggressively, you have a token. That's one thing. The example will be something like CET. If you want to participate in our mining, you have to lock your token for some time. That's one thing. Two is to prevent the large institutions who has large number of tokens to sell everything at once. We have a sell and lock mechanism, meaning that if you sell more than a certain number of your tokens, you'll be forced to lock the rest of tokens for some times to prevent them from dumping our tokens.
That is a very interesting model. That essentially means that they can't go and dump a large portion at any point.
Yes. Yes, we care about retail investors. If you have a small portion of our tokens, and it's okay, you can trade it as much as you want. You can sell it as much as you want. But if you are an institution that holds a large percentage of our tokens, we have to limit the ability to sell everything at once, which is, I think, it's benefit for most of our token holders, meaning that they cannot dump and buy at very low price.
Right. Have you worked those numbers out yet with regard to the caps on the institutional investors?
Yes, we have the mechanism for the numbers. We haven't fully decided yet. We have a rough number, but we are running much more sort of simulation to make sure there is a balance between how much you can sell and do not interfere the market too much. So the current process, yes, I think we're the first one to raise this type of models to want to make sure our token price is stabilized in secondary market and to protect most investors' rights. Yeah, interest.
Absolutely.
Yes.
Now let's talk about your business model in a more holistic sense. Now, short term, you're focused on the mining aspect, that's for sure. But let's move that beyond that, because eventually I understand you want to move into a more regular exchange.
Yes, yes. I think, mining is a strategy that for most exchange to do a cold start. Before mining starts, before F-Coin, we see how Binance and F-Coin start from zero is they list lots of tokens, they attract organic volume, and gradually they become big in the field. But as soon as F-Coin starts, so we found the mining exchange, the 0 to 1 point is very fast. Organically, you just attract lots of volume. Now the challenge becomes how do you convert those volumes, those trading volumes, mining volumes into organic volumes and stay. So my view is no strategy will sustain from all different life cycles of our exchange and our business. You have to adapt. So for a startup company and for a medium-sized company and for a listing company, you have to apply different mechanisms, different strategies. So of course, trading, mining, transaction mining is not one solution for all life cycles. I would say it's a perfect solution and probably the most important solution for us exchange from startups to a medium-sized exchange. So half year from now, when mining finish, we have to apply different tactics. We have to use different strategies to make sure we success as a medium-sized or top tier, big-size exchange. At that time, mining is not our strategy anymore. Yeah, I hope I answered your question.
You did. So essentially your ultimate goal is to be a regular exchange and service. Now, how are you going to, once again, ensure that you can make that transition given the fee structure? Will the fee structure change to enable that to happen?
Yes, the fee structure will change. As soon as the mining ends, if everything is mined out, we're going to reduce our trading fees by a lot. Right now we're charging 10 bips just because we give everything back. But if after mining stops, if we don't have any tokens to give back to investors, we'll definitely lower down our trading fees, at least by a large number of percentage. So we'll make it very fee friendly. Also, I'm thinking for market makers at that time, we may very well provide a rebate, just like NASDAQ and NYSE does, to incent institutional traders to trade on our platform. And hopefully by that time, we'll have enough organic users who wants to trade it instead of just mining.
Right. Now, clearly, it must be challenging in one respect because you're actually designing this longitudinally based on the speculation and then the anticipation of all of this working through as you plan. Are
Mhm.
you finding that difficult because obviously you have to do this incrementally?
Yes, I think this is very difficult. Fcoin is a very good example. The reason they fail is because their mining period is only maybe 2 weeks to 4 weeks. There's no way for exchange to convert their business model in 2 or 4 weeks. So the biggest problem for us, and I think what makes us different from Fcoin is we want to extend the money profit period from 2 to 4 weeks to maybe half a year, even longer, 1 year, so that we can have enough time to to attract real organic users, and user will become loyalty to our platform because they say, okay, I'm happy with your service, I'm happy with your API, happy with the product you provide. So they will just stay. So the one thing is we hopefully we should extend the period as long as we can and try to keep users, stay with our platform. At the same time, we'll apply different tactics, different strategies to incentive users from other dimensions to keep trading with us.
Sure.
Yeah,
Thank you for explaining that. Now, let's talk
sure.
about jurisdictional preclusions and challenges. You mentioned before about your focus on fiat exchanges in the US and in Canada. Now, the SEC, KYC issues, there's a lot going on there right now. We even talk about ETF being delayed for some time until that the prospect of that even happens. Now, are you concerned at all, given that the US does tend to take their time? They certainly are aware of some of the challenges of the overall landscape of crypto itself. Is that going to put a spanner in the works, so to speak, in your roadmap, or is that actually a boon for your system?
Well, I actually view it a very positive thing for us. So compared with half a year ago, we have a much clearer regulatory path to to follow people. So half a year ago, most people have some uncertainties on which way we should go for the to be a fully regulated exchange. For example, Coinbase used to apply for money transmitter license for every single state in the U.S. They spend, you know, millions of dollars, take a very very long time to get that. But right now, SEC made it very clear you do not need to do that. All you need is a broker-dealer license plus an ATS license. You can do that. So it's a federal license. You don't have to apply in every state. So that's why I think the regulatory path is clearer than before. All we do is we need to follow the instruction provided by the regulator, and we'll get there sooner or later. So there are only, I would say, a few minor things remains uncertain at this point. People know how to get there. And to be fully regulated, meaning that three things in my view. One is your trading platform, your trading architecture, whether it's fully compliant. You need to have your auto reporting, you have your trading surveillance system to be able to tell SEC, okay, our investor is fully protected. That's one thing. Two is you have to have the proper people. You have to have Series 24 holders in your company, at least two for broker dealer. And three, you have to have all the management process, the principle in place for SEC to audit your entire process. So all three things you need to be in place before you can process. So I've seen a lot of people in the space are going pretty far in a way, and we will follow them to get fully regulated in the US. And for KYC issue, yes, KYC, custodian, settlement are always very important in US. And the good thing is in the regulatory space, almost all the countries follow US government. So once US government clear the path for regulatory, people will know how to do it in different countries. So which will open the door for so many different jurisdictions and institution users to enter into this. So and as far as as soon as it clear the barrier, we'll see lots of new monies coming. And the current fact that's being delayed is because people just still experimenting the regulatory requirement, which is a good thing for our new exchange, because if everything is clear, I'm sure Coinbase and Gemini will get everything correct. So there's no chance left for our new emerged exchange. So right now, so everyone is holding up at the same game. So so we still have a chance to emerge and compete with big players. I see as
Sure. And
a
it sounds
positive
like
thing. Yes.
you're quite optimistic about the overall future of the cryptocurrency and even blockchain
Yeah.
situation in the US overall.
Mm-hmm.
Clearly, you're a proponent for that to become a much
Yeah.
more robust ecosystem. Now, I want to talk to you about security as well, because obviously you need to have a very strong system built in for this all to work. Talk us through the 7 levels that you have and what you offer to ensure security.
Sure. We have different aspect of security. For example, the most front level is network level. You have DDoS attack. Hackers tend to attack your servers or hack into a system. That's one security issue. Two is the wallet. So how to make sure your wallet, the client money, how the custodian money is safely stored. That's one thing, right? And secondly is how do you protect from misbehavior from your employees. That means you have to need a very thoroughly designed menu, employment menu, and to confirm who can have access to the wallet and what is the procedure to transfer money in between the wallet. And then you have the small contract issue. Some tokens has defects in their small token design, may enable hackers to check smart contract itself. It's not specific to the exchange. The attack will be across the board for all different exchanges, right? Mm-hmm. So that's the sort of level of, and then you have for any investors who have an account with you, it's very likely the chances are very high that somebody just leave your password in an unsafe place, that somebody can take over your account. Or from the exchange side, there's no way to detect that because they are using the regular message login, use a cell phone, use a password. And then how do you prevent people when other people log in your account? How do you detect the unusual behavior and protect it? Protect the customer as much as we can. That's another layer. So there are so many different layers of protection over the system. So I would say we work with 3 different crypto audit / security companies to do a thorough audit of our entire security system. So far, the feedback we got are very positive. That's one thing. And this is an ongoing thing. It's not like we did it, we put it there now. This is an ongoing thing. We will do it on weekly. We still keep working with these companies. We are engaging with more auditing / cybersecurity companies to detect any potential security problem within our system. That's one thing. Two is we are working with small contractor hacker detector groups using machine learning and artificial intelligence mechanism to detect any possible attacks on a small contract itself. If you call the burn function, if you call some other function in small contract itself, we'll get the alert. We'll detect the hacker group. That's okay. 2 things. And 3 is we have a very solely written compliance manual for everyone. So nobody can have access to our cold wallet without the proper approval for multiple people. So I'm making sure your wallet is very safe. Our wallet, cold wallet, is very safe. And our hot wallet, we buy insurance on hot wallet, meaning that even there's a small number of percentage of asset in hot wallet, but we want to make sure it's insured. Just in case anything happens, our investor will get protected.
Okay, so that's quite rare. I'm sorry to interrupt, but obviously having insurance provisions built into a hot wallet isn't commonplace even now. So congratulations for securing that. Can you tell us a bit more about that? How did you go about doing that? And what's the current status of that kind of cover?
Yes. So I would say it's not a rare practice in North America. I know many crypto funds, I know many family office are taking an approach of protecting their wallet because if they're actually trading, they cannot store everything in their cold wallet. And based on the number of assets they in cold wallet, it's quite dangerous for them to leave it unprotected. So there are a number of insurance companies provide this kind of service in North America and also in Europe, to my knowledge. So we're not among first them. I don't think we were even among the first 10 of them. Mm-hmm. So the question is whether you are willing to pay a high premium fee to protect your wallet and to protect the investors. So my question is yes, we will do whatever we can to add additional layer to client and investors.
I see. Now, just talking about fees, sorry to interrupt, but this is relevant. How do we minimize the fees for the user, given that you are going to build in insurance as a service?
Yes, this fee will be transparent to user, meaning that we will cover the fee by ourselves. We do not charge anything from the user. The user will notice no difference. The only time they notice is once their wallet get hacked, we're going to reimburse them.
I see. Well, clearly you're doing a great deal on the security front, and congratulations for being so assiduous in that area. Now, I want to talk to you about something a little bit more challenging in this regard of decentralization. Now, you mentioned before in the interview that you will be, and your team will be selecting only top tier projects. Now, to me, those kind of statements reflect a very centralized, if not ultra centralized system. How are you going to evolve into a more decentralized model? Talk us through what the steps you're going to put in place to allow for the users to have a voice.
Yes, that's a very good question. So for now, as an emerging exchange, it's very hard for us to do a decentralized voting or listing projects because we do not have a mature community right now. So right now, what we do is we want to take our own effort to make sure we filter out we only list the very high quality projects. And going forward, once we have more users and our community is properly set up, we have community manager, advisor in each different community. So we'll slowly adapt the process of listening to community users. So there are different mechanisms like Fcoin and other exchange on how people can voice their concerns on which token be listed and which token not be listed. Right now, to be very honest with you, we have the vision of enable users to voice their concerns, but we have not have a very well designed mechanism yet. Just for the reason being
Right.
that I see a lot of abuse of their voting rights. For example, if you can use if your voting rights is set up, the number of votes can be positive according to how many tokens you hold. It being very much manipulated by those big whales.
Yes, and
big institutions.
exactly, and that's the concern. I want to discuss this and really extrapolate this with you now. Now, obviously, you mentioned that if you're a large token holder, that can afford you a great privilege in a sense.
Yes.
Really an imbalance of power. Now, you're suggesting that you are going to redress that problem in your design, but are you also going to have some sort of foundation or some sort of mechanism that's an interim body of people who have the expertise to discern what a good project is? Because obviously, the majority of people don't necessarily understand DD, don't understand the depths of the necessities involved in trying to deduce good quality projects. So again, votes can also be problematic if it's just an open setting. How are you going to navigate through these complexities?
Yes, my view is we were trying to find a balance between the number of votes you get from the tokens, and also we will have a listing committee which consists of a certain number of people, both from our own exchange and our investors, and also advisors from different areas of experts to view their concerns. So we were trying to find a balance in between. We definitely will not say, okay, if you hold the majority of tokens, you have absolute sayings on which project you're listing. And also we want to listen your voice. So we do have a foundation, but right now we have a listing committee, which have 3 members from our own team. And we have several members from outside our team. Many come from our investors and also our advisors. So they're very experienced in crypto world investment. So right now, we have the committee like that. But going forward, we'll gradually adopt voting rights from our users like token holders, and we will design mechanism to find a balance between who will decide which tokens will list.
Right.
So go ahead.
Sure. The reason why I ask you that is because obviously we've seen issues with Binance, and this needs to be broached directly in that there's been open voting opportunities for often there's 4 different projects, and there's a lot of controversy with regard to that because often there's a lot of questions raised rather than answers provided as to why certain projects did essentially make it for that month. So once again, what you're saying, from what I understand, is you're not clear yet on how you're going to do it, but you're certainly learning from those that already are.
You can say that, but I think from very high level, I'm sure I know how to do it. We'll combine the community voting and combine it's actually a combination of decentralized solution and a centralized governance. So I think the model will exist for a very long time before we find a perfect decentralized solution. So from a very high level, I know how to do it. It's just a question, how do we design the mechanism to prevent people from abusing the system? So that's our question.
And when will we know more about that, George? When will you be able to disclose and publish information that clarifies this so we know?
Yes, I hope I can release it very soon, but everything is still under design. I would say maybe a month from now, we can have a very clear picture. So right now in the current months, we're only listing very few projects. So maybe 1 or 2 per week. So going forward, we'll probably list, for the next month, we'll only list 4 to 8 projects, which are very high quality projects. Compared with, we can compare with what type of project Coinbase lists, we pretty much list a similar quality project. So right now we see a less issue of listing and taking votes from community. But going forward, yes, we definitely want to list many, many projects. At that time, this issue will become very more important. We will make sure we have a perfectly designed mechanism to involve more users' votes.
Right. So right now it's quality over quantity, and then eventually we're going to look at both areas as
Mhm.
priorities. Now, your team, there's not a lot of information yet on the website, I've noticed, about your team. Talk us through your team, what the skill sets are, what really sets you apart, if indeed it does.
Yes, I'm so proud of my team. So we are like a big family. So I would say our team is so different because most crypto project, blockchain project, the team are very young. So early 20s and late 20s were considered a senior kind of a joiner or senior player in the crypto space.
Mm.
However, our team, like myself, I'm almost 40 years old and I'm not the oldest in my team. So our team reached the age from 30 to 50. So they have combined 200 years of working experience on Wall Street. Uh, every single core developer has over 10 years of working experience in the space. The space meaning high frequency trading, trading platform, exchange. So that's why I'm very proud of my team. So we are not here for quick money. We want things correct.
Can you tell us
Sure.
how Wall Street experience, given that it's a traditional model, is relevant in this new model that's emerging now?
Yes. So consider with a crypto exchange, I view it as it's a combination of exchange, a broker dealer, and maybe a trading firm. So it's not a exchange in a traditional financial model. So by saying that, of course, people from exchange space will know more about exchange matching engine. So how exchange works, how the exchange economics is. And people from broker dealer space will know how broker dealers works because broker dealer is such an important role that connects the investor, connects KYC, custodian, and connects to asset management. So it's a very single, most important piece in the ecosystem. So right now, the crypto exchange is a combination of everything. So that's why we need different people from different component of the ecosystem to be able to build a giant kind of a company. And also people from trading platform knows how to build a high frequency trading service, trading platform. And that's how they help. And their vision, not just on the technology side, on the regulatory side, on how business should be conducted, on how to protect people from investors, they are all very helpful.
Right. Now let's talk about the investors. You just mentioned them. Now you have some pretty big names that have come through. For example, you have GBIC, Danhua, Talk, Python Capital, Lemniscap. You have FBG, Matrix Partners, one of the more prominent ones in China. But the big one, the big daddy of them all, is Bitmain. Now that's one of the largest, if not the largest, mining pool mechanisms available anywhere in the world.
Yes.
How
Mhm.
important are these investors to the success, particularly initially, to your overall future?
We appreciate our support from our investors. They are definitely very, very important to us. So I want to make sure none of the investors invest us in because short-term financial returns. They share the same vision with us. For example, talking about BitMain. So we have several very, very long conversations with BitMain. So all they concern, or their vision is how do we direct the entire crypto industry into a fully regulated path in supplement to existing financial system. So we're not talking about overhaul the entire financial system, but we share the same vision that the crypto exchange and crypto economy will be a supplement to what we currently have to add more diversified to the entire world economy. We share the same vision, and we know crypto people we have to grow up together. We know we need to do lobby to the government. We need to help regulators to do the more regulatory path to have more control over different projects. We need to regulate the people, how the people raise money. We need to prevent from pump and dump, grab and go kind of scam. We need to educate people how to invest, how to avoid risk, and how to maximize your return kind of stuff. So these are taking lots of effort. I'm happy all these our investors share the same vision of us. They,
Right.
I mean, yeah, the most frequent word they say is, George, do not worry about short-term return. We are here doing a very kind of strategic investors who want to make sure we help the entire industry, not just make money. So I
Right.
totally agree with them. Yes.
Now, George, I want to talk to you about that statement. Now, I've had a look
Sure.
through some of those investors, and I want to be specific about the long-term aspect. How can you be sure? Transparency is one of the buzzwords on your website. How can you be sure that this group of investors are going to, in fact, enact or practice what you preach, and that is transparency, and also how are we going to know that they're going to hold the value of your utility token? and not
Well, that's
essentially follow that pattern we've seen so many times over with VCs or with any other investor.
I'll give you a very good example. So talking about the sell and the lock mechanism. So this is actually targeted on investors, big investors, not retail investors. If you invest 5 Ethereum, you will not be impacted. But if you invest, say, hey, 2,000 Ethereum, you will be impacted big time. So we launched those kind of mechanism in order to protect smaller investors and make sure we success in the long run. So all our investors are very supportive of that. None of them say, hey, George, I have to unlock my token on day one. None of them say that.
Okay.
They will say, all right, yeah, we are long-time believers. We do whatever we can to help you.
Sure. Well, we appreciate that. And thank you for explaining that you have that lock mechanism for, equity reasons.
The big investors. Yes.
Right, exactly. And it's important that you mentioned that it does cover all of them that are listed there. Now, let's talk about wash trading risks with regard to the back and forth of trading, self-trading for the benefits of, using the system that is afforded by them, often these transactional mining mechanisms. What kind of trigger technology are you employing to stop this from happening?
Well, there are different levels of things. For self-trading, it's very easy to target. We simply do not allow people to self-trade, trade by yourself. If you're from the same account, same user ID, our system will not allow you to place a trade against yourself.
But can you tell us how? How are you doing that?
Well, just because one is if you place the only way you can place trade against yourself is you place a limit order some here and you place a take order at the same price or limit order same price. So we have a mechanism to detect that from our technology API side. It will just reject the other leg of your order. So just impossible to do that. That's a very easy target. But however, wash trade, if you have multiple accounts or if you trade against your friend, this is pretty hard to detect because how do you know this is a real trade that happens trade with a friend or it's a trade that happens continuously? So we deploy certain mechanism to detect this trade. If a certain percentage of your trade happens between these two accounts, we'll certainly raise the alarm and freeze the account and call you to ask what's going on over there. So there are certain exceptions for market makers because some type of market makers, their responsibility is provide liquidity to the market. So there's a higher chance that they will hit themselves if the market moves a lot. But this only to the market makers, and we definitely will keep a threshold to a very low volume. And we have, like I said, we have trading surveillance system. We have also reporting system. So every day we'll print out the record and see if you hit yourself or if you hit another player for over a certain threshold, we'll ring you, we'll send an email to you to ask you to explain the rationale behind your trade. We want to make sure the trade is a legal trade, it's a make sense trade. It's not a trade just for trade. So that's kind of steps we're taking, yes.
Right. Well, it sounds like you are being quite proactive there. Now let's talk about the future of BITMAX as well. Now, my understanding is that you do plan to become a public chain well into the future, but that's not yet in your roadmap.
It's not yet. I would say it's a very longer term vision. So I would say it's more like step 3, a few years down the road. So we don't have a concrete plan yet. So it's just our vision, yes.
Okay, now on vision, let's talk about a few things now. As I said before, the buzzwords for the BITMAX vision is transparency, reliability, and speed. But talk us through some of the things that you really foresee in terms of actual events and things that are likely to eventuate according to your roadmap within the next year.
So you mean transparency or a roadmap, right?
Well, in the context of those 3 terms of transparency, reliability, and speed, talk us through actual things that you plan to do that reflect.
Sure. Yes. For transparency, actually, we're doing I think we're doing a very good job right now. So every single event happens within our system. We'll make sure we record that, we archive that, we're ready for audit. So or a trader comes here, want to examine his track record, we can provide you in our system without any latency delay, right? So everything is recorded. It's called transparency. That's one thing. And 2 is from the business side, is we always keep very transparent to our communities. Except for the things we have signed confidential or NSA agreement, we're actually very transparent for our progress on the business side, on the development side, and also on the on the future kind of a planning side. We're very transparent. I spend lots of time in the community, in both in Chinese community and also English community to explain things to the people where we are and what's our plan. So that's the level of transparency and that's what we commit to our community, right? transparency, and the next is
And then you also have reliability and speed.
reliability and speed. Yes. Let's talking about speed for a second. So speed, once you're talking, we did a thorough analysis of all the cryptocurrency in the world. So the latency is huge. For example, the latency is measured by the time you place your order and by the time you receive an act. There are very high percentage of exchange, they do not send back act at all, meaning that if you send the order through API, you do not know the order status, which is very risky.
Yes.
So for us, we have two type of API available. We now provide a WebSocket, and we will apply fixed API to users, which is a pretty standard equity world API. So what we do right now is we measure our latency. If you take out the level delay, it will be in numbers of microseconds, which is extremely fast. That's in line with NASDAQ and the NYSE. Of course, since we do not have colocation at network round trip time, it will still be very low millisecond and maybe also sub-millisecond. So which is very, very good compared with all other exchanges existing in the world. That's one thing, the speed. Right. And reliability, meaning that, again, we have failover tests in our system. Everything goes wrong, we can always roll back. We have backup servers. If there's disaster happens in our data center, we can seamlessly switch to the backup servers. User won't even be noticed that. So these are type of things, yes, very typical to, I would say, that's why I would say our Wall Street experience and traditional financial market experience are very helpful, because there 100 years, 200 years in the traditional financial market, there are very standard playbook, how do you design system, how do you provide a very robust service to your clients. So that's the thing we want to borrow from the traditional financial world, and we want to bring to the new kind of crypto trading world.
Sure. Now, George, obviously the nature of your platform is imperative as well in terms of how user-friendly it is. Tell us exactly what you've done to date with your team to ensure that it is user-friendly, and what the feedback has been from those that have tested it.
Yeah, to be honest with you, that is one of the shortcomings we have. That's actually the weakest link in our team, because Wall Street, we don't have a website. NYSE doesn't have a website allowed to register and trade, nor does NASDAQ, right? So that's why I have said, so it's crypto exchange is a combination of a broker dealer and exchange. So our team at first outsourced our website design to a third-party vendor, which I think the result is not that helpful. We got lots of negative feedbacks from our community users, and we realized the problem. We keep improve that. We hire an internal team, and we are actually doing improvement on a daily basis. Right now, if you log into our system, it will be totally different from like 1 month ago. So we are happy. Yes, we are happy. Within 1 month, we completely redesigned our system, and we delivered it. So over past week, we have made a 40+ improvements our system according to the feedbacks from our community, the Telegram community or WeChat community and online community. So every user feedback, we write it down in a list, and we make sure we are on top of that. Some of the things take longer time to fix. But some of the things we work around the clock. I would say there are 2 weeks time, none of our developers go home. They just sleep in a hotel next to our office and trying to work day and night to fix the problems. And we're starting to get very positive feedback from users. So I'm not saying it's a perfect website now compared with Binance or other thing, but it's much, much better than before. And we can expect an even better website 1 week, 2 weeks down the road. So
and that explains, sorry to interrupt, that also explains the imperative of really listening to your community. And it's, from what you're saying, is you're using these social media channels that represent BITMAX, and you're listening to what people are saying, what they're writing, and you're actually doing something about that in terms of improving the interface itself.
Yes, we listen to community all the time. There's one thing I think we did better than Coinbase is the community. Coinbase doesn't have a customer service team. Coinbase does not have a community, which is totally wrong. So every successful project needs to have a strong community support for them to be successful. And we take it very serious.
Right. Well, you couldn't say it better any other time. Thank you very much for your time. George, you are the CEO and founder of BITMAX. You've informed us today of key facts of all the different aspects that represent the BITMAX in terms of what you're planning to do. You are a crypto exchange. You also mentioned that there's certainly more coming, both for Canada and the US in the future for this tripartite exchange plan. But we look forward to watching you emerge in this space as you become arguably one of the new exchanges to lead the way in the future.
Thanks, Brad. Thanks a lot.
You're very welcome.